You probably shouldn't buy an investment property in 2024. Well, that's at least the advice I'm giving the majority of investors who've reached out to me in the last 3 months. It is getting tighter and tighter, and the pricing is not slowing down. To find a good cash flowing property is becoming quite difficult, especially for those who are only looking at new listings. My name's Adam Fyfe, your Calgary Realtor. If you are looking at getting into the market, it is always so important to do the research well in advance. These videos are to educate you into what is going on in the Calgary real estate market. And I can tell you right now, the majority of investors that I've worked with are just not working out. I have investors that have 20% down, 30% down. I even have investors who have all the cash down, and they still can't seem to find that perfect property that they want to purchase within the numbers that they feel comfortable pursuing. So this video is to showcase a little bit about what's going on with this market. If you have any questions and you want to talk about some of these strategies that I'm going to talk about, go ahead and book a call with me. The link is in the description. For you investors out there, please be aware, if you don't have your numbers, you don't have a pre-approval, and you don't know what your mortgage or property manager is going to be, please email me first and I'll get you linked up with the professionals. Then we can book a consultation. So got a little bit of an announcement here. Very excited to say I'm actually going for my commercial real estate license. So in the next 30 days, I will hopefully have that commercial real estate license. So this investment video that I'm about to go over is not only going to talk about residential properties here in Calgary, but we're also going to touch on some of the commercial side of things. I would imagine in time, I'm most likely going to have 2 separate videos, a residential investment and a commercial investment. But for the first few videos, I'm probably just going to pepper in some smaller content until I figure out a good flow of how I want to present this information and what exactly I want to get across. So let's start to look at the Canadian rental prices across the country. And the average asking rent price is $2,193 for February 2004. That's up over $200 from this time last year. You can see that yes, the rental prices have increased, but that doesn't mean that all of the investment properties in Calgary actually make sense. The pricing has increased, as well as the interest rates are still very, very elevated. So just keep that in mind. Now, when we start to break this down into the provinces, you can see that Alberta is leading the charge at 20% year-over-year growth, followed by Saskatchewan and Nova Scotia. You can see across the board, we're seeing double-digit price growth, and even those 1 and 3 beds seeing 20% and 22%. So we're seeing some very dramatic increases in the rental pricing. Now, for rentals here in Calgary, Alberta, we don't actually have rental caps, meaning that the investor can increase their rent price to whatever they feel fit to match the market demand. A little bit unfortunate for the investors, for the renters out there, but it's very favorable for the investors. So those who've been in the market for a long period of time are capitalizing on this opportunity, for lack of better thought. But for those who are looking to purchase properties and buy those investment properties, even with the increase in rents, it doesn't actually make all the sense right now. So let's start to look at this chart here. This is a breakdown for all the municipalities in the country. Some of the major ones, that is. This is rentals.ca, and you can see that Calgary is actually ranked 16th for the most expensive place to rent in the entire country. Now, there are some other charts out there where Calgary's more like the 25th, 28th place. This one is reduced down to maybe some of the bigger cities in the country, and you can see Calgary's ranked 16th. You can see as a total or an average, we're at $2,059. Okay, we're up 10% year over year, which on this chart, it's actually one of the largest increases. Now, when we start to break it down into Calgary, we're going to start to look at just the ways that we can look at investments. So it's very important that when you're getting into this market, you're kind of using this data to your advantage so that you can find more realistic numbers. The easiest way to find rent prices is by using rentfaster.ca, looking for the property type that you're looking to purchase and looking in the immediate community. But for those who are curious, this is the breakdown for each individual quadrant. For unfurnished, then this is also the breakdown for furnished in each individual quadrant. So we're not really going to use this data too much, but this one here is going to be our data set that we use for the spreadsheets in future slides. This breaks it down very nicely for property type and bed size. You can see that the red arrow up is a negative for the renter, and a green arrow down is a loss, and that's a positive for the renter. So when you're looking at this, just make sure that you look at this from the renter's perspective if you are going to look at the green and red arrows. Now, I think it is very important to realize that there are pretty expensive homes here in Calgary right now. No, they're not expensive as Toronto. No, they're not expensive as Vancouver. But if you're from Calgary and you've been doing this long enough, you would agree with me that these are quite expensive from what they were last year, 2 years, 5 years ago. The total residential price is all the way up to $585,000, up 10% from last year. Detached is up 13% to $722. Semis up by almost 13% to $639. You can see townhouses is up by almost 19% to $436, and apartments is up by 17% to $329. Now, I would imagine in 2024 at least, we're going to see these double-digit price growth all throughout the year. We might go up and down a little bit as the year progresses, but I would imagine we're going to see an increase in price all throughout the year. Now, I want to touch on this really quick. This is a breakdown of the map. So again, when you're looking at properties and opportunities, you have to remember if you're looking at something in southeast, you can see it's 666 and 566 and 574. It's going to be a lesser value compared to something in northwest, which is 641. So the homes in northwest are going to be more expensive, meaning that you might not get as nice of a home for the same price as what you would get in southeast. So if you're looking to overlap some of these rental prices and you're looking to overlay that with home prices, maybe looking in southeast makes sense, maybe looking at east makes sense, maybe something in northeast makes sense. So you want to make sure that you're getting the foundation built, that you understand how much homes are worth in each individual quadrant. Some quadrants are more sought after than others, but it's still very important to know what those prices are. Now, this is just a quick caveat. I want to go through this quickly, but I believe it's very important for people to realize I'm not a mortgage professional. Always consult with your mortgage professional before a realtor. It is very important that you get your numbers. If you don't have your personal numbers and you do not have a pre-approval and you're getting an 80% mortgage, don't book a call with me seeking advice. Go out, reach out to me, call, text, email, say, hey, I'm looking at investing. Who would you recommend that I get in touch with here in Calgary? I want to get some numbers down. I'm more than happy to get you connected with a few different professionals. You can do your research and then we can start to lay that foundation and start to go over some of the strategies. I'm not a property manager. I don't plan on being a property manager. You need to interview and hire a property manager before you invest in a property, okay? The PM is very important. As an example, let's say that I find a property and I say, hey, you know what? It's probably gonna rent for $2,500. And then you end up buying that property, you go to put it on the rental market, and then we realize that it's only gonna rent for $2,300. Now, obviously that's a big kick in the shins. We do not want to experience that. So having a property manager, if you're gonna go down that route, is very important to kind of keep tucked in, right? You wanna have them give you their opinion on specific properties and confirm those rents and confirm that they're going to charge you X amount per month and all the services that they're going to provide for that cost. Every situation is very different. There's no one size fits all. Investing takes a lot of time, patience, and the ability to act fast. The ability to act fast is very, very important. Sometimes I have dealt with this where I can't see a property within 24 hours because my schedule's full. So we need to have that strategy of how we're going to go ahead and maybe place an offer blind and do something behind the scenes. Maybe we have to pull in another agent to help us. But the ability to act fast on these opportunities that are priced well is very, very important. This content is for educational purposes only. This doesn't replace a consultation. I mean, at the end of the day, you want to make sure that you get your team developed, your team built before you actually go and make any sort of investments or you place any sort of offers. Making sure that you have a very clear-cut plan as to what you want to do is absolutely the most important thing you can do to make sure that you have the most amount of comfort making decisions quickly. So let's look at this here, okay? Let's actually bring this up a little bit. So this current spreadsheet is the detached with legal basement suites. Now we're only looking at $450 to $650 for the entire city, okay? In this piece of criteria, there was only 9 sales in the past 30 days. That was 6 less than last month. That means that it is a very competitive market, okay? Now, from the average that I've seen, it was about 615,000. So when we click on the MLS here and we actually zoom into this a little bit more, you can see that the average list price, again, was around that 615. So you've got the list price and then the closed price of what it actually sold for. Then you've got a percentage here. You know, this one actually sold for under ask price. It was 98%, which is awesome to see. It was in Forest Lawn. It was in the Eastern Quadrant. It was built in 1958, 5-bed, 2-bath, 1,000 square foot, and it had an oversized, I think it was a single car garage. Yes, single detached there. So very important to realize that not every quadrant is going to have the same amount of numbers. All of these properties, or most of these properties, sold over ask price besides this one in the Northeast Saddle Ridge. And yeah, that's kind of that. As you can see in this average here, a couple properties sold within 48 hours, so unconditional offers. You can see that one here was within a week or just over, and then everything else was around a week and a half to 2 weeks, given their circumstances. So with the average, like I mentioned, you're looking at around a $615,000. Now, down payment of 20%, $123,000. Mortgage is about $492,000. Now, you've got an increase from last month for the price point, the mortgage 5-year term, the amortization, then the interest rate of 5.59. Now, I really need to stress that this is just an average. I have seen interest rates. I have worked with investors who have 7% interest. I have worked with investors who have 5% interest. It is very important that you realize that every situation is going to be slightly different. If you have debt, if you don't have debt, if you have great income, if you have low income, every situation is going to be very different. So this is why it's so important that if you reach out to me saying, hey, I want to use your spreadsheet, I'm going to say, hey, what interest rate did you get locked in? Okay, hey, how much are you looking to put down for your investment property? Do you have 60,000? Do you have 150,000? It's very important numbers to realize, because if you could see here, this estimated mortgage payment for 5.59 is just over $3,000. If we go to 6% here, you can see it's jumped all the way up to almost $3,200, right? So it's very important to realize that slight percentage increases can actually greatly impact the mortgage. Okay, so for the rents, like I mentioned before, we're gonna actually go back here and just use these numbers, which is linked in this spreadsheet. So for the 3-bed up, a 2-bed down, I just put it's about $3,900. Now this is a fully detached home. We have the estimated mortgage payment. We have the estimation of taxes. There's no condo fee. There's no, so your home insurance, home utilities, as well as city utilities are typically covered. Maybe you want to do a all-inclusive rent. That's fine. We need to add that into the rental income as well. So with this basic overview of the single family with legal basement suite, we have an income of $47,000, a debt servicing of $36,000 right here. We've got our operating costs of around $4,700, which leaves us with a monthly income of $477, which looks good on the surface. Now let's dive into that. Gross yield is actually 6.8%. I like 7%. I love things over 7.5%. I think that's very important, and we'll touch on that in a moment. Now, with that being said, you can see that when we start to add in these contingencies, so you've got our price here, you've got our annual incomes, and then you've got your property management fee of 10% if that's what you're planning to do. You've got your rentals vacancy at 5%. Right now, you could probably drop that down to about 2 to 3, but at the same time, you want to make sure that you're protected if the market does change. Your repairs and capital costs, you always want to be saving money for stuff that's going to go wrong. It's not if, it's when. There are going to be issues that arise with the home, and you do not want to take money out of other investments to fix this investment. It's very important that you realize that. So when you start to add all of this up and you remove it from the total income, you've dropped from $3,900 all the way down to $31,000. Now we go back and we add in some of these costs like property taxes, insurance. We drop that total from $3,100 all the way down to $27,000. So you have an income loss of $306 per month after you put in these things. So if you were, on an example, not to count either of these, and you're like, you know what, I'm willing to take the risk, I still want a property manager, yeah, sure, you could probably make $86 a month. But to invest $123,000 and only make $86 a month, it's not really that great. Yes, there is appreciation. Yes, you can try and time the market to hopefully sell in the future for an increase, but that's not always guaranteed. And sometimes things go wrong with that property, which forces you to sell that property. And if you're only making $86 a month without any protections, it's not a very smart investment in my personal opinion. When you scroll down here, we're not going to touch on this very much. We got a mortgage breakdown and then a cash required to close. So things to remember is that you need to obviously pay for a lawyer. You need to do a building inspection if that's what you want to do, and I would strongly recommend it for an investment property, as well as a property appraisal if you are planning on getting a mortgage. So with that being said, let's look at the legal basement suites of a half duplex home. So semi-detached half duplex, $450 to $650 for the entire city. 7 sales in the past 30 days. It was the same as last month. So again, let's really think about that for a second. There was only 7 sales. So when we start to look at this is the semi with legal basement suites. You can see that there is very low sales. You can see that they're actually scattered all across the city. City center, northwest, southeast, east, northeast, city center, and north. Literally every single quadrant minus the southwest. So there are things all over the city, but it's very important to run those numbers to make sure that those investments actually make sense. On average, I was looking at around 100 or 550. So if you have 20%, that's 110. So your mortgage is 440. Amortization, all of this stuff is going to be the exact same. So 3 bed up, 2 bed down. Again, if you are looking for specific properties, out of the 7, let's just see how many. So there was 1, 2, 3, 4. So there was 4 properties here that actually had a 5 bedroom, meaning that there possibly could be 2 bedrooms downstairs. But there was also 3 opportunities that have 4 bedrooms. So maybe you're only getting 2 bed, 1 down, or 2 bed and 2, or whatever the case might be. And the point is, you really want to make sure that you're running the numbers that are more in line with what you're hoping to achieve. So when we start to look at this, $3,900, okay, which is great. Now your estimated mortgage is a little bit less because your mortgage is less. Your property taxes should be a little bit less depending on the year that you purchase. No condo fees, home insurance, home utilities. With all of that being said, there is a potential of getting $796 per month. Okay, that sounds great and that is awesome. So if we look at this 550 and we go back to here and we go and we look at, let's just say, this one here was a 5 bed, 640, Ambleton North. Let's just pull this one in, 640. So this one actually more or less with a 5 bed is 640. So we start to put that in here, 640,000, right? You drop that rate down to 350. Right? So this is exactly what I'm saying about, yes, I can show these nice grand averages, but when you start to put in the actual pricing of different properties, it's very important that you run these numbers in advance. So when we run down here, if this were to actually be the real property of 550, 5 bed, you would look at 3,900. You got your property property management fees, your rental vacancies, your capital gains or your capital improvements. Then your property taxes, you're dropping all the way down to 2,700. So if you actually just look at the mortgage here of 2,700 and we start to see, oh, this is 2,700. Well, you've got a profit of 13 bucks. Now let's also remember that you are saving 196 per month and 196 per month. So that's not bad. You're saving about almost $400 a month, which is pretty solid, plus 13 bucks. So I mean, if you could find this opportunity, fantastic. Unfortunately, the rate of return is not quite 6%. I love to see 6% minimum. If I wanted to personally buy a property, I would really try hard to find something at 6%, which is again, very hard to accomplish. So we start to look down here, mortgage breakdown, cash required to close, everything's going to be very similar to the other one that we just looked at. Now let's touch on townhouses. Townhouses is quite interesting. Yes, you could buy a townhouse for less money. It might be newer, but I'm looking at townhouses with garages. Okay, you don't need to look for townhouses with garages, but I want a garage if I'm buying an investment property. 350 to 500, at least 2 beds and up, entire city. 119 sales in the past 30 days. That was 27 less than last month. 440, $88,000, 352. Then you've got a 3-bed townhouse is only going for around 2,600 bucks. Okay, so as you can see, the single income is significantly less than the dual income of the legal basement suite. So yes, it does take a little bit less cash to purchase a property like this, but you're missing out on potential income opportunities. So 2,600 bucks, and then your mortgage is already 21. You've got property taxes about 209. You've got condo fees of 209. You've got your home insurance is a little bit lower. So you start to add those numbers up. You start to think, it's probably not going to work, right? So you start to look right off the hop. If this was the right opportunity, if this was the opportunity you're looking at, you're losing right off the hop $116 per month. That is not even including any of your contingencies. So we scroll down here, you've got $525, which I would strongly recommend that you at least save. And then you scroll down, you're looking at a negative of $641. That is a horrible investment, and no one should ever, ever, ever think about any property that they're losing money every single month. It just doesn't make sense to me. Wait, have patience, find the property. Don't get in here because don't get in the market because everyone else is getting in the market. Now let's look at apartments. Apartments within city center. So let's make sure that we're looking at only inner city properties. I had to break it down a little bit. 150 to 350, 2+ beds, at least 700 square feet, 91 sales in the past 30 days, which 33 more than last month. 276 was about that average price point. So a lower entry of 55. So that's a $30,000 less entry. Now, when we start to look at the 2 beds, you're probably getting around $2,300. So you start to look at your mortgage, okay, 5.59, your mortgage, your property tax, your condo fees are quite high. Yes, you can find a newer property that has lesser condo fees, but you're probably going to spend over $300,000 on that newer property, if not getting up into the fours. So there's going to be a give and take there. Yes, you could save on condo fees, but your mortgage is probably going to be more expensive because you're probably going to have a higher mortgage, but that also means that you're probably going to have a higher down payment. So yes, you got to run these numbers. Now, when we go down here, it's looking not bad, you know, positive $177. Now we start to scroll down here, right? You throw in all those contingencies, like I continue to say every single time, you're losing $281. So this obviously showcases to you how average it doesn't actually make sense to purchase properties in Calgary right now. If you had $123,000 to spend, if you had 120 to 140, it does be a little bit more favorable. If you are considering doing a self-managed unit, then that could also work out because you're saving yourself 10% that you would typically pay a property manager. But not everyone wants to manage their own properties. So it does take a lot of consideration as to what's involved in that management process. So like I mentioned at the beginning of this video, sometimes, a lot of the times, it doesn't actually make sense to invest into the Calgary market right now if you're looking for cash flow. I do not like to make investments off speculation that the home prices are going to increase. Yes, the home prices will most likely increase in 2024 and 2025. But let's remember that if you are hoping that they increase, they need to increase so much that you are going to be able to pay for the commissions to sell the property. They're going to have to pay for any sort of condo documents that you have to obtain. They have to pay for your lawyer. They have to pay for any additional closing costs that you might inquire. There could be a massive increase in Calgary still. I just don't personally believe in purchasing real estate with that speculation in mind. I want to buy investment properties that make sense now so that if they go up or down in the future, we can make adjustments where needed. If you are cutting it close with an investment property and you're buying it, cutting it close, and the market decides to go down in 3 years and you have to sell it for even a similar price point, let's say it increases by $10,000. If you start to run your numbers and then you start to run the commissions and then you start to run how much money you've potentially saved, even if it only increases by $10,000 or $15,000, it really wasn't that great of an investment. You should have more or less put that money into a safer investment account and let that accumulate through mutual funds, right? 3 to 6% per year. It's a little bit of a safer opportunity. So it does work to buy investment properties. It just is hard to find those opportunities. It is very important to run these numbers. If I work with investors, I make sure that they have a very clear understanding of how these numbers work. So if you have any questions, go ahead and reach out. But like I mentioned, it's going to be very difficult to work with different investments this year. It's just being harder and harder. So my name's Adam Fyfe. I hope you like this content. Comment your questions below. If you have any information for me, you want to see me do something a little bit differently, I'm all for it. Thank you very much for those who support me, support this channel, and we'll see you on the next one. Peace.